Anthony Scaramucci reveals buying crypto during crash, suggests staying disciplined. Many crypto investors have sold their assets due to the ongoing market volatility. However, the effects of the crash are still reverberating across all the exchanges and crypto firms. Some lost liquidity and couldn't sustain users' demands, while others downsized their staff capacity. Some investors seized the chance to add to their crypto portfolio amid the chaos. An example of such a future-oriented investor is Anthony Scaramucci. Scaramucci has revealed that Skybridge Capital, his firm, increased its ETH and BTC volume during the crash. So when others scrambled to sell off to avoid losing all, this firm was busy stacking up for the future. According to Scaramucci, investors should discipline themselves more during the havoc instead of panicking. He pointed out that if Amazon could survive its winter 20 years ago, crypto top contenders would overcome this winter too. Staying disciplined is the key in crypto. The market reports are not looking good at all. Data shows that June 14th was the worst of the days as most cryptos declined terribly. Right now, the bloodbath keeps deepening, and even the number one crypto BTC fell lower than its records in Q4 of 2020. These incidents create a lot of fear and panic in the industry. But for Scaramucci, staying disciplined was the best option amid the chaos. He made this stance known during an interview. Scaramucci has always been a strong supporter of Bitcoin. Right now, even when the signs are not positive, he believes that crypto top projects like BTC will rebound like Amazon stock after the storm. According to Scaramucci, Bitcoin has recently dominated the entire crypto market to higher levels. So, there's hope it will rebound. Regarding the reasons for the continuing downward trend, Scaramucci blames it on the actions taken by both Celsius and Terra during the fall in price. To avoid things like that, the financier advises investors to avoid leverage but stay long. 13,000 now? Scaramucci initially warned investors to be careful when scaling their Bitcoin investments. But, according to his strategy, they should never forget that crypto is here to stay and, as such, must be allocated the right size when investing. Does discipline involve more investment? During the interview, Scaramucci was asked his reasons for buying more BTC and ETH. Was the move a part of the discipline he recommends? To answer that, the financier said that stacking up is a part of the discipline. He believes that after the storm has passed, many people would wish they had bought into the dip instead of playing too safe. Ethereum reverse gains, why ETH could dive below $1,000. Ethereum failed to clear the $1,250 resistance against the US dollar. ETH is declining and remains at a risk of more downsides below the $1,000 support. Ethereum started a fresh decline after it failed to surpass the $1,250 zone. The price is now trading below $1,200 and the 100-hourly simple moving average. There is a connecting bearish trend line forming with resistance near $1,095 on the hourly chart of ETH/USD, data feed via Kraken. The pair could resume its decline unless it clears $1,150 and $1,200 in the near term. Ethereum price remains at risk. Ethereum attempted a recovery wave above the $1,200 resistance zone. However, the bears were active near the $1,250 level. A high was formed near $1,256 and the price started a fresh decline. There was a move below the $1,200 and $1,150 levels. The price even settled below the $1,200 level and the 100-hourly simple moving average. A low was formed near $1,050 and Ether is now consolidating losses. An immediate resistance is near the $1,090 level. There is also a connecting bearish trend line forming with resistance near $1,095 on the hourly chart of ETH/USD. The trend line is near the 23.6% Fib retracement level of the recent drop from the $1,256 swing high to $1,050 low. The next major resistance is near the $1,150 zone. It is close to the 50% Fib retracement level of the recent drop from the $1,256 swing high to $1,050 low. Any more gains might call for a test of the $1,200 level or the 100-hourly simple moving average. A clear move above the $1,200 resistance zone may perhaps start a decent upward move. The next major resistance is near the $1,260 level. Any more gains could start a move towards the $1,350 resistance. More losses in ETH. If Ethereum fails to rise above the $1,200 resistance, it could continue to move down. An initial support on the downside is near the $1,050 zone. The next major support is near the $1,000 zone. A clear move and break below the $1,000 zone could start a major decline. In the stated case, the price could slide towards the $880 support zone in the near term. Hourly MACD the MACD for ETH/USD is now losing momentum in the bearish zone. Hourly RSI the RSI for ETH/USD is now below the 50 level. Major support level $1,000. Major resistance level $1,200. Is the Bitcoin halving the key for a BTC price bottom? Bitcoin is still holding above $20,000 despite a massive increase in selling pressure over the past few days. The cryptocurrency has experienced some of the worst capitulation events in its history and could be read for a fresh leg down. At the time of writing, BTC's price trades at $20,700 with a 7% and 31% loss in the last 24 hours and 7 days respectively. Market participants seem to be expecting new highs, but a resume in bullish momentum could catch them off guard. A pseudonym trader believes that the key to finding BTC's price next major bottom is the Bitcoin halving, the event that cuts this network block rewards in half every 4 years. The analyst claims that during a drawdown, the cryptocurrency finds a bottom 780 to 889 days after its previous halving. Currently, the Bitcoin network is at 766 days away from this event as it approaches a critical support zone. As seen below, when these two events coincide, BTC's price can resume bullish momentum and reclaim previous highs. The analyst claims that the halving is part of a bullish thesis for Bitcoin as the cryptocurrency reduces its issuance, and there is less BTC available in the market. Conversely, BTC's adoption levels trend to the upside. The analyst shared a chart from Blockware Solutions. As seen in the chart, BTC's price seems directly correlated to the percentage of the population adopting it and indirectly correlated to its supply issuance. This is the ultimate bullish case for Bitcoin in one simple visual. Exponentially growing user growth juxtaposed with Bitcoin's pre-programmed increasingly deflationary monetary policy. Claiming that the world is still early on Bitcoin, the analyst added. Why does the halving model have any validity, and where does the imaginary logarithmic support curve come from? Simple supply and demand economics. The block reward is the vehicle for Bitcoin total supply inflation. BTC miners provide constant sell pressure into the market. Should you go all in on Bitcoin? Despite this thesis, the analyst claims that BTC could still face a lot of volatility and a lot of range-bound movement. In addition, BTC's price could take time to form a convincing bottom. The analyst said the following on BTC's price potential to retest new lows: